Alright, let's do it. Let's talk about Doge. For those who don't know, Doge is a cryptocurrency that was made as a full-on joke. It's widely used to tip content creators and resembles that infamous Doge meme from a couple of years ago. So this week, following the restrictions that these trading apps and brokerages like Robinhood and Trading212 put on certain stocks like GameStop, AMC and others, the WallStreetBets subreddit kind of decided to turn Dogecoin into the crypto equivalent of GameStop. After the bullish sentiment made its way through Reddit as well as Twitter, boosted by no other than Elon Musk, Dogecoin reached a high of around 8 cents, which I think equates to something like an over 800% gain across a 2-day period. But it's calmed down a lot since then. I own crypto. I don't own Doge. I never will, like never ever, but I do own Bitcoin and Ethereum. And if there's one message I'll give out to the small number of people that are watching this video right now, it would be to be careful and understand the risk you're taking. I'm not in any way a financial expert by any means, so you don't have to listen to my advice, but there are a lot of newcomers entering the market encouraged by what they've been seeing on the news and media, and they're looking to make a lot of money very quickly without any understanding at all to what they are doing. I'm not saying don't invest, do have your fun. I mean, I sure have been having my fun this week, but be careful with the risk you're taking. It's all fun and games until you realize you've been f***ed over because you forgot to put a stop loss, or your trading app decides to make your own decisions for you. But yeah, I found that whole event quite amusing, and that was only a small part of a very eventful week. I'm not going to go into depth too much because there are over 1,000 videos covering that already, and I don't want to make this video too long. But I do feel like there will be some harsh consequences to the so-called big guys who deserve it, and hopefully even a change to the whole investing environment so that gap between these large firms and retail investors becomes narrower. The S&P 500, Dow Jones, Nasdaq and Russell 2000 are all down this week as we saw a slight market sell-off, which I don't think was a huge surprise to anybody. Fundamentally, technically, whatever alley you want to use, I think it's fair enough to say that the general market is quite overvalued at the moment based on those metrics. Now, that doesn't mean that the companies that are deemed overvalued are terrible. In this case, we've just seen the market trend upwards and upwards for an extended period of time without any significant pullback. Since the beginning of 2020, we've seen a lot of companies' stock become less correlated to the business itself for whatever reason. You could refute that by saying that the market is forward looking, but really how far into the future are we actually looking into? You could also say that looking at these metrics are pointless, because if we use Tesla for example, they only became profitable in the last year or so, and if one of your requirements is to only invest in profitable companies, then my boy, you've missed an incredible run with Tesla. So relying on these numeric calculations aren't always beneficial, and instead you should be investing in the business itself. I'm not going to get into that too much again because I don't want to make this video too long, but this is another one of those healthy pullbacks that we need. I don't know how long it's going to last, and maybe you'll see a 10% correction from here, maybe 20%, maybe just 5%, nobody really knows. Paul Briscoe released a video that came out yesterday from when this video gets uploaded that went over valuations and stuff, so you should check that out if you're interested. And I've got to say, I am glad that there are still a few channels out there that aren't releasing these hype 20x, 700x stock videos. It's kind of refreshing to see. But anyway, last week I was trying to think of what catalyst could kind of pull back the market, and basically said that a delay of stimulus check, vaccines not being as effective as first hope, new strains of the virus, and of course an overvalued market. This week kind of introduced something else though, with the whole rebellion, if that's the right word to use, against Wall Street. As more and more people began buying these stocks that had incredibly high short interest in them, were there people pulling out money from their main portfolio to fund these? And then the people that lost money buying GameStop at the top, did they sell their other stocks to cover their losses? I don't know if there's any specific way to calculate that, but with all the euphoria that was pumped up through social media, I don't think that's such a far-fetched idea, because when you think of the likes of Apple that had an extremely good earnings announcement by their Mac results, their stock price dropped in the following days, which again could just be because of the high valuation of the market, but maybe because people were taking their profits for that to cover their losses or to fund their GameStop. But anyway, whatever the reason is, I'm happy. So during these dips, I'll obviously be buying and trying to invest all my cash or free funds that I've been sitting on for a couple of months now, waiting for an opportunity like this. Right, so let me get over to my portfolio. At the moment, I'm sitting at around a 10%-ish gain, and I've reduced my portfolio even further. So right now, I'm focusing on investing in 11 different instruments, 9 of which are held in this ISA, and then 2 which are NEO and C are held in my investment account. The other stocks within my portfolio are not bad companies at all. I'm still deciding on whether to sell them and then use that cash to put into my 11 instruments, or just keep them there and let them benefit over time. I'm still kind of fighting myself in my head over that decision. So if we start off with my top winner this week, we have Mr. Richard Branson and Virgin Galactic. Unfortunately, or fortunately, depending on which way you want to look at it, Virgin Galactic was actually a byproduct of the events we saw this week, where investors targeted heavily shorted companies in an attempt to squeeze shares higher and caused the big firms shorting them to lose money. Their sister company, Virgin Orbit, had some successful launches earlier this month, but that's completely unrelated to the matters of Virgin Galactic, so I can't really establish a connection there. And yeah, that's really all the news about Virgin Galactic this week. So following Virgin Galactic, and I think my only other stock that ended positive this week, is tdoc. And once again, no significant news for them. They did start the week well though, rising about 9% without any obvious catalyst, so that was kind of weird too. But no, they're a great telehealth company, a telehealth leader I would say, and thanks to their Livongo, is that how you pronounce it? Livongo? No, I think it's Livongo. Thanks to their Livongo acquisition, it will be a leader in digital health management too. So I'm definitely looking forward to what they have to do this year, and I'm not looking to sell out of them anytime soon. So my top losers this week, let's start off with second to last, which is Digital Turbine, and surprise surprise, we have no news on this. But it makes perfect sense as to why they fell 15% this week. I mean, look at their chart setup, incredibly overbought after climbing straight for a couple of days. It definitely needed a cool down, and here it is. I still think they are a company in a league of their own, so I'm most definitely going to be putting in some more money within the next couple of weeks as it continues to fall or consolidate. Coming on to my worst performer this week, and we have Celsius Holdings. This one was extremely obvious. After an announcement that they were going to be added to the S&P 600 small cap index a couple of weeks ago, their stock price shot up to new all-time highs and became incredibly overextended, so a pullback was definitely needed. It hasn't dropped to a price that I'm eager to invest a lump sum into just yet. I think it can still go lower within the next 2 weeks or so, which is when I'll be deploying more money into it. But yeah, this is good. I'm loving it. Another opportunity for me to get some more shares at a cheaper price. And I think a lot of investors will be thinking the same thought. Cool, and that's a quick overview of my portfolio. Not the best of weeks and not a lot of news around my stocks, but it will give me and other investors an opportunity to invest in our stocks and companies that we believe in at a cheaper price. So in my eyes, it's a beautiful situation. Alright, I'm going to wrap things up there and I'll be back whenever because I'm just very inconsistent.